Let us look at this question on the reversal of share splits. Zabzugu, a parent company, had 6 million and 1 cedi fully paid ordinary shares outstanding in 1st June 2024. On October 2024, the company made a consolidation of existing shares in issue, a reverse share split at normal value on a 2-for-3 basis. There was no special dividend, share repurchase, or outflow of resources. Having completed the consolidation of shares, a new issue for 600,000 was made through an offer for sale at the market price of 1 cedi 55 per share. The allotment was made on 1st March 2025. The proceeds were due on 1st April 2025. Summary of financial statement as at June 2025. They had loss of 448. The company also had in issue 500,000 of 5% cumulative redeemable preference shares throughout the year ended 30th June 2025. In accordance with IFRS 33, earning per share, calculate the basic earnings per share figure for the year ended 30th June. All right, so that is the question. Let us look at what we can do about this question. All right, the company name is Zabzugu Limited. Now, the question is some outstanding shares, which is split, which was forward split, which is 6 million. The date was what? 1st June 2024. And they said that on 1st October 2024, there was what? Consolidation of share splits, which is the same as what? Share reversal. Share reversal. And the reversal was what? The reversal was 2 for okay. They also said a new share issued. When was that? When was the new share issued? It was issued. So having completed the consolidation of shares, a new issue for 600,000 was made through an offer for sale at the market. The allotment was made on 1st March 2025, and the proceeds were due on 1st April 2025. So new share issue. So watch here. This is what they did here. Issued date was what? 1st March 2025. And then the proceed received date on when? On 1st April 2025. Have you seen this question? All right, so they issue how much? 600,000 shares. So if you are in this position, how do you solve this question? All right, so the rest you'll deal with them later. So here they also said that there is preference shares of what? 500,000 at. So there's what? Preference shares, which is what? 5%, 500,000. Good. So this is the question, and they want you to what? Find the earning per share. So calculate earning per share using this information. Now, this is what? Reversal of share split. Now, let us look at the accounting year. So the solution. How do you solve this question? So one, check the accounting year. Very, very, very important. Accounting year is what? 30th June 2025. So it means the accounting year begins when? Means accounting year beginning, accounting year was when? 1st August 2024. Let me check. So the accounting year is when? 30th June. Oh, okay, sorry. So if the accounting year is 30th June, then the accounting year begins when? So the accounting year begins 1st July. So this is the question that they want you to what? Work on. So how do you do it? What you have to note here is this. Watch here. The outstanding share is what? Is forward split, which is what? Or 6 million, right? And they issue new share, which is not what? Which is not split. And that one is what? 600,000. You understand? You understand? Which is not split. So for that reason, you cannot combine these two shares together. You cannot combine them together. You understand? You cannot combine them together. So before you can work this out, we have two methods in working out this. I have two methods in working out this, but let me settle on this simple one for you. So first thing that you have to do is one, reverse or consolidate the shares. Now, how do you consolidate the shares? You already have what? A share which is split. So you have what? Shares which is what? Split. Right. So reverse it. So how do you reverse it? So you have it here. You have 600 or 6 million. That you multiply by, they give you what? Split ratio, which is 3, which is 2 for 3. Split ratio, which is what? 2 for 3. So you reverse it. So you have what? 2 for 3. All right. So when you split it, when you reverse it, you will get 4 million. So let me hang 3 zeros here. So which gives you what? 4,000. Which gives you 4,000. So now you've reversed it. Okay. So let us do our table. So the second point is what? Conduct. Draw your table. You have what? You have your period. You have what? You have what? Shares. You have month. You have adjustment. And then you have what? Your weight. Okay. You have your outstanding shares. And the date was what? 1st June 2024. Right. You have what? You have your shares that what you've reversed. Understand? So you need to what? You need to retrospectively what? Calculate this. So you have what? 4,000 here. Then you have your what? Your new issue. So now that we've reversed this, right? It is now whole. So for that reason, we can what? We can add it to the new. We can add it to the new share issue, which was not split. So the new share was what? Was issued when? The new share was issued when? Let's check. The new share was issued on 1st March 2025, but you receive proceed on it on 1st April 2025. Which one will you choose? You can see it there. 1st March was issued, and then what? Proceed was what? In April. So if you are in that position, which one will you which one will you use? You have to use when you receive what? The proceeds, not when you issued the shares. So when you receive the proceed after issue is the date that you consider. All right, so come here. So the new issue and paid is when? Is 1st April 2025, because the accounting year starts from what? From first it starts from 1st June 2024 to 30th what? 1st July 2024 to 30th June 2025. That is the accounting year period. And so don't be triggered by the date you see over there. The new issue was 600,000. So I've hung 3 zeros. So this one will go to 600. So when you add it, what do you have? You have 46 or 4,600, right? That is what is there. That is what is there. You can see it. Okay. Now after that, then you apportion the date or the month. Now from 1st July 2024 to 1st April, how many months? It is 9 months. 9 over what? Over 12. And then the outstanding before the end of accounting year, when you add it, well, that's the 2 shares they issued so far. So the rest is 3 months. So 3 months, because once you've already, this one has already taken 9 months. So the rest will be 3 months to the end of the accounting year. It was from April, May, June is when the accounting year ends. Because according to the accounting year is for 30th June. So when you are done, what do you do? This one gives you what? 3,000. This one gives you 1150. So when you add it, what do you have? You have 4150. So this becomes your wins after after reversal. So how do we calculate our basic earning per share? In order to find your basic earning per share, you should know your profit for the year. Now, when you look at this question, they didn't make profit; they made loss, and the loss is what 448. So the loss is what 448. That is the what? That is loss. Or into bracket loss. Okay. The formula for basic earning per share is what? Basic earning per share is equal to what? Profits attributable to shareholders, ordinary shareholders, minus preference dividend, if any, all divided by what? Ordinary shareholder, all divided by what? All divided by your wins. Now, let us prove this here. Look at the profit attributable to profit or loss attributable to what? To the ordinary shareholders. When we look at this question, we realize that the total profit, and this statement is consolidated statement of what of a company. So for that reason, the profit or loss are combined between parent and subsidiary. However, they have shared the profit or loss among the parent and subsidiary. So you have what parent earning, parent loss. When they share the loss, parents is what 478, and what and subsidiary loss is what is 30. So when you add it, it will give you 448 loss. So it's easy here. Now let us also test for preference dividend in the person. Now when we look at the preference dividend, we have what 500,000. So I hang 30 of what of 5%. That would have been our preference dividend. But remember, notes, you cannot pay out what preference dividend when the company made loss. So for that reason, the dividend will be what? Dividend shall be accumulated for next year when profit is what? Profit is made. Okay, so here we can now calculate our, so you cannot calculate. So now we can now calculate our basic earning per share from this question, where you will have our loss parent. Remember, it is parent. Don't pick the two, it's only the parent. Profit attributable to only parent. So you will have your loss of what 478 divided by your wins, which is 4150. What do you have here? So what do you have here? You have 1.15, right? Or it can also be 0.11. All right, so that is it about this particular question. Also take note of that. We take note of that, especially when you already have existing splits and you are bringing in a new share that is not split. We take note of that. All right. Thank you very much.